When we talk about estate planning, I tell all my clients, especially my clients with a little bit more complicated estates, this is a group effort. This is team effort. In the really high net worth realm, you have like family offices, home offices, whatever you want to call them, where like it's one office that deals with literally everything. They're your business, they're your estate planning, they're your financial advising, and they're your accountants and tax strategists. But most people don't have enough money to need a family office. But at Arch Legacy, we are creating something somewhat similar to that. But the one thing that we are never going to do is be financial advisors. So what I do is I've created a lot of relationships with other financial advisors that I really trust, that I know have a lot of integrity, they know what they're doing, and I work very closely with them. So when we set up a revocable living trust, as I've said many times, you do need to make sure that the trust actually owns your assets. And some of those assets are probably going to be your brokerage accounts. Or is the trust listed as contingent beneficiary on your insurance or your retirement accounts? What are the implications of those retirement accounts? If they do flow into the trust, we need to make sure that there's the stretch involved with being forced to withdraw from those accounts. This obviously coordinates very carefully and very closely with your financial advisor. So I've seen a lot of financial advisors. I've worked with a lot of financial advisors over the years. Ideally, if a financial advisor refers me their client, I am going to work with them. We don't want to play a game of telephone where I tell the client something and then they call and tell their financial advisor something and it's wrong. Because then the financial advisor calls me back and they're like, why would you tell my client that? And I'm like, I didn't tell your client that. So it is very important that I have a relationship that I can just communicate directly with your financial advisor to make sure that everything is handled appropriately. Over the years, I've seen this backfire in a couple of different ways. I had an advisor call me and really just for 30 minutes, who do you think you are? They don't need a living trust. Probate's not that bad. How long have you been working? What law school did you go to? What are your credentials? How much experience do you have? And I'm like, sir, you need to take a seat. I don't have any confidence issues when it comes to this, but just to answer your questions, I graduated from Emory Law School in 2013. I've owned this firm for 6 years. I've been a practicing attorney for 13 years now. I used to represent 8,000 physicians. I was a lobbyist, wrote a lot of legislation. I don't know what you want me to say. I know what I'm doing. This is what I do full time. And I don't get in your lane, don't get in mine. So it is really important that your attorney and your financial advisor have a good relationship, and also that your financial advisor is not stuck in the 70s, because things are different than they were back in the 70s. And a lot of those old school financial advisors are not willing to change or adapt to putting your brokerage account into your living trust. So that's number one. You want to make sure that your team can work as a team, because if something happens to your spouse or to you and your spouse is still alive, or if something happens to both of y'all, or if you're single and your kids are involved, we want to make sure that they have a team of professionals that can work together and make sure that everything's set up exactly how it should be set up. I had a client really recently. She called me. Her mom is in her 80s. Her and her brother are both taking care of her. They are her mom's only children. They are both very active. They're both named as financial power of attorneys, which I actually don't recommend doing, but they were in this case. It was working out fine for them. And they reached out to the financial advisor because the mom had a very healthy estate, very healthy, way more money than she was ever going to need. This financial advisor, the mom was 86. The financial advisor had invested all of her assets into stocks years and years ago and then shelved it. Literally at 86, she was still 98% invested in stocks. No, this is not what an 86-year-old's investment should look like. That being said, she still had plenty of wealth to take care of her for the rest of her life. And she told her kids that, I don't want all this money. You should have some of this money. I want to go ahead and give some of this money to you. Now, most financial advisors are all about this. Lifetime gifting, it is absolutely an accepted and normal practice within financial advising or estate planning. However, for whatever reason, this financial advisor got his panties in a wad and he didn't want to deal with it. I don't know. Maybe he didn't want to lose any assets under management, and he reported them to legal for elder abuse, for taking advantage of their mom and asking when their mom said that she wanted to give this lifetime gift. And they locked down all of her money, and they were not even able to access this money to pay bills, which is literally so illegal. They were legitimate and legal power of attorney agents for their mom, and they were not taking advantage of their mom. Their mom stated it very clearly. So I had to go down to a hospital and record her saying that this is what she wanted. Bless her heart. She was on machines. They had to unplug her from the machine so that she could talk to me. But she was very mentally competent. She remembered what year they were born, where they were born, what year her husband passed away, what her grandkids' names were. I did all the tests. And all because of this one financial advisor on a power trip who decides to lock down all of her money very illegitimately. So I had to send a legal letter to them demanding that they release the funds. And then as soon as they released them, we were going to have another financial advisor go in and ACAT all the money over to new accounts. Because obviously all trust had been lost with this financial advisor at this point. So I helped them find a new advisor that has a lot more integrity than that advisor and set them up for a much better place. But this is how important your financial advisor is and how integral to this process. I am not a financial advisor. I will not be your financial advisor, but I want to be able to work with your financial advisor to make sure that everything's wrapped up exactly how it should be. And I don't want your financial advisor calling me and yelling at me thinking that I'm some stupid little girl that doesn't know what I'm doing. So it is a very important relationship. It's important to have a really good team in place that can protect all aspects. Same thing goes with your tax strategist or accountant or CPA, that they be on board as well. So yeah, it's really important to have a really good financial advisor that can understand and keep up and be a part of the team and work together as one, because I want to work with the team. I don't want to work out here by myself on some island by myself. Making sure that you have that team in place is really important. Making sure that you have a financial advisor that has integrity, that has your best interests at heart, that's not out there just trying to get as many assets under management as possible and then retire and not touch your accounts ever again. Very important, and definitely a great idea to reevaluate that and make sure that your advisors can all work together.